Hello, beautiful people. This is Freedom Fighter. Thank you for tuning into our channel, Goldilocks Global Banking News. Everybody knows that Goldilocks is the number one source for the RVGCR. People from around the world tune in to see what Goldilocks is sharing on the RVGCR. Don't miss your chance and get your latest updates every day. So like, share, and subscribe to this channel to get your daily podcast from the Goldilocks articles on the RVGCR. Brought to you by Freedom Fighter. Hello, beautiful people. This is Freedom Fighter, and welcome to Goldilocks Global Banking News. Folks, Goldilocks is sharing more. There is more and more in the last few days being reported from Iraq, directly from the Central Bank of Iraq, than a very long time. There hasn't been as much reported from them openly as much as it has been lately. Goldilocks is sharing what those updates are today relevant to the revaluation of the Iraqi dinar. And then also Goldilocks is sharing information from the Federal Reserve Board, which is absolutely important, relevant to our banking system here in the United States and also central banks all around the world that must have enough money and protection in their coffers in the event of a potential crash to the market. No, I'm not saying there will be one. What I'm saying is, as of Basel III, it is a protection mechanism so that there will not be another 2008 crash. Those mechanisms are being finalized as of October the 1st. Let's jump right into what Goldilocks is sharing today. The Federal Reserve Board's announcement of final individual capital requirements for large banks effective October the 1st refers to regulations setting the minimum amount of capital, money, like cash and other liquid assets such as gold, cryptos, foreign currency assets, and others, that large banks must hold to absorb potential losses and maintain financial stability. See, folks, July 1st, which was the Basel III endgame requirements, went into effect for all central banks and major banks, large banks around the world. You must remember, see, when you hear something like this, don't automatically assume because it's Basel III, because it's large banks, that it doesn't affect the currencies that we hold. It absolutely does, folks, because this is related to the central banks, all central banks around the world, and the money they have in their coffers. Folks, the Central Bank of Iraq is the Central Bank of the dinar. The Central Bank of Vietnam is the Central Bank of Vietnam. These are the banks and every other one that for the currencies that you hold, the central banks of those countries are responsible and govern those currencies that we hold. So don't just automatically assume because it's not the Central Bank of Iraq that it's not relevant to any of the currency you hold. All central banks are the central banks that govern the currencies that you have in your hand or wherever you have them. Whether it's the dump behind the dumpster, under the mattress, in a shoebox, at a safe, at the bank, wherever you have those currencies, it's the central bank of those countries that govern and hold those currencies. So this announcement for the Basel III, which is for all central banks around the world, is relevant to those currencies that you hold because it's the central banks that govern them. See, some may just summarily dismiss when they hear certain things because they may not understand it, so I want to explain it to you. These requirements are based on what are called stress test results. that were conducted earlier this year, which are tests for all central banks that were completed, whereby it's proven now that they've passed all the tests, that if there was some sort of 2008 crisis that were to happen again, and for our younger audience that may not have been around or too young to know about the financial crisis, where here in the United States and all of the world was affected by the 2008 financial crisis, where many businesses and people lost all of their money. So you got to realize that everything is absolutely connected to everything. Basel III was created as a safety mechanism as a result of the 2008 crisis. So now, July 1st, the Basel III endgame, all these banks and central banks around the world are compliant with the new regulations to assure that if there is another crash, that they will be able to safeguard against it. October the 1st, it all goes completely live in the world. So just imagine, for whatever reason, God forbid, there was a crash and you have all that money in the banks. Now there is a safety mechanism where these banks have enough cash, at least a minimum, $100 billion in cash at least, a maximum amount of gold to protect as an anchor, foreign currencies as an anchor, and cryptocurrencies as an anchor. See, the purpose is for the capital requirements is to ensure that all these banks are safe in the event of a financial hit like 2008. Can you imagine if you exchange all your dinar, your dong, whatever currency you hold, and it's converted into US dollars, specifically those here in the US, and then there's a crash? Well, you remember the Great Depression? Or you remember hearing about it, reading about it? People jumping out of windows and people, ending it all. You wouldn't want to have all that money. And then there's a crash at the bank. It might be Great Depression 2.0. We don't want that. October the 1st, the mechanism is in place to protect us. The stress tests have been completed. There's been stress capital buffers. Protect. This protection is for global, systematically important banks to be protected. This framework is part of the Federal Reserve's effort to strengthen the banking system since 2008. To align global standards with the Basel III means that banking regulators worldwide, including the Central Bank of Iraq, the Central Bank of Vietnam, and others, they all are adapting and implementing the framework's stricter international requirements to improve bank stability and reduce the risk of another crash. So for those of you who are hearing this doom and gloom crash coming, that's a conversation for another day, but there's protection mechanisms in place. Yes, Basel III was specifically designed to increase banking liquidity by introducing liquidity requirements to protect the banks. Now let's talk about the Central Bank of Iraq. Reforms. Many of you that have been following Goldilocks have been watching and paying attention how Vietnam has implemented many reforms lately. Now the Central Bank of Iraq, for those who have been following, been paying attention, seeing how Iraq and Vietnam is mirroring each other like frick and frack. Two peaks in a pod. Side by side on many of the reforms and mechanisms that they're implementing for their banking system. The Central Bank of Iraq launched a reciprocal money transfer system via e-wallets. E-wallets, which is a significant step toward enhancing financial inclusion and supporting digital transformation. What is the technical name of the new banking system? It's called the digital asset based trading system. The digital asset based trading system, which in dinar land they call the QFS, with all those, scammers all over Telegram and everywhere else telling people that there's some QFS account and to scan your wallets and all that garbage and they take your money. Nope, because there's no such thing as a QFS account. But that's a conversation for another day. What Iraq has done with implementing the new digital transformation e-wallet accounts, it enables faster, more flexible financial transactions for individuals and businesses in Iraq, allowing money to transfer between verified e-wallets and to merchant wallets during purchases. This move facilitates fund movement, money movement, boosts the business sector, and promotes the adoption of financial technologies in Iraq. This is Iraq now even more than before, upgrading their banking system to be in compliant with international digital requirements. Vietnam just recently implemented new reforms for creditworthiness. And here we go. Iraq announcing direct from the CBI. Assessing customer creditworthiness in Iraq is governed by a combination of regulatory controls primarily enforced by the Central Bank of Iraq and aligned with international standards, such as those set forth by the Financial Action Task Force. What is that? The Financial Action Task Force, folks, is the governing sanction body that sanctions banks and countries around the world. Iraq just passed and implemented certain reforms in order to not be sanctioned. These controls are critical for financial institutions to mitigate risks associated with their lending, and to comply with anti-money laundering and counterterrorism regulations. Goldilocks highlights key regulatory controls that protects the Iraqis. You must realize that the dinar must be protected first in Iraq before it goes international. How is it possible? Do you think that Iraq will be ready for their dinar to go international around the world without it being safe in their own home? Who's going to do that? But they're getting ready. They're preparing their banking systems by safeguarding the Iraqi dinar in their own home country of Iraq. Certain key regulatory controls that Iraq has implemented recently and reforms regarding creditworthiness, for example. Customer due diligence requirements, meaning background checks on all of the people who deposit or do business in Iraq with the dinar. I said in Iraq. When you go to exchange, as of July the 1st of this year, there's new laws here in the United States, specifically for those who exchange the Iraqi dinar, that there will be background checks. This here now is specifically in Iraq. For transactions in Iraq exceeding 5 million dinars or more, there will be background checks. And then KYC, know your customer regulations. Iraq just implemented those reforms, which is a part of the due diligence on the Iraqi dinar. Anti-money laundering and counterterrorism financing framework regulations finally implemented by Iraq. These are the regulations and the reforms that the United States folks told Iraq they had until the 31st of August to complete, or else they were going to be sanctioned. They did it. Creditworthiness assessment to make sure when Iraq loans money out to their people, make sure that they're creditworthy. Now Iraq will implement reforms. They have implemented reforms to evaluate the character of their customers for the trustworthiness to do business in Iraq in Iraqi dinars. They must have the amount of capital, collateral, and conditions in the bank in the event of terrorist activities. International alignment and reforms Iraq implemented. One of the major reforms that they had to implement to be considered for the World Trade Organization is many of these reforms. The digital banking and emerging regulations as well. Goldilocks is stating that Iraq is currently developing protocols to further implement their banking reforms. Quite frankly, folks, Iraq is behind the rest of the world when it comes to these reforms. Vietnam's implemented them most recently. Iraq is trying to catch up right now. The U.S. just passed some most recently. China, Europe, many other banks, even Mexico, Canada. Iraq is playing catch up. They just passed all of their stress tests for these latest reforms, or they were going to be hit with sanctions. It was in writing. Think about it. It was in writing by the U.S. to sanction the Central Bank of Iraq if they didn't implement these reforms by August the 31st, which they did. But weren't you told many weekends before August the 31st that it was going, it was going, it was going, it was going, it was going? There was the delay. Folks, for years you've been told that. But Iraq just finished implementing reforms set forth by the U.S. How is it possible a few months ago, a few weeks ago, a few years ago, it was going, when reforms to secure their banking system, they just implemented prior to August the 31st? Are you sure that you are aware of what's really going on with Iraq, with Vietnam, with any country for the currencies that you hold? Do you have a plan in place for when any of these currencies do go? Because no, they're not all going at the same time. It doesn't work that way. There's no flip of the switch. It doesn't work that way. Many countries, many currencies, many agreements, many trade agreements, tariff agreements, many mechanisms, digital and otherwise. There's no individual or entity that stands over all of Forex to make currencies go in a certain direction all at once. Each country, each nation, folks, is an individual sovereign nation all to themselves. Yes, these tariffs have caused volatility in the currency markets, in the Forex markets, where they are now moving because of new agreements of trade on the water. Folks, if you do not have relationships established with the actual bankers, you're going to be left like that poor, beautiful girl who got stood up at the prom. Don't let that be you. We love you, folks. Be well. Ciao.
Hello, beautiful people. This is Freedom Fighter. Thank you for tuning into our channel, Goldilocks Global Banking News. Everybody knows that Goldilocks is the #1 source for the RVGCR. People from around the world tune in to see what Goldilocks is sharing on the RVGCR. Don't miss your chance and get your latest updates every day. So like, share, and subscribe to this channel to get your daily podcast from the Goldilocks articles on the RVGCR. Brought to you by Freedom Fighter.